Market capitalization improved by 6.9% to 12.24 trillion naira from 11.45 trillion naira during the same period. Relative to end of December 2016, capital market indices rose by 32.1 and 32.3% respectively, reflecting growing investor confidence due to improvements in foreign exchange management. Total foreign exchange inflows from the CBN rose by 1.98% in August 2017 compared with the previous month. Similarly, total outflow increased by 7.03% during the same period as a result of increased international remittances, inclusive of public sector and JVC payments, which rose by 58.59% in the period under review. Committee noted the trend towards convergence between the rates at the Bureau de Change and the autonomous foreign exchange market (NAFEX) segments, as well as the stability of the exchange rate at the interbank segment of the foreign exchange market during the period under review. Similarly, the committee noted the success of the investor and exporters window of the foreign exchange segment and traced this not only to foreign investor confidence, but also to the zeal and commitment of Nigerian exporters who have demonstrated preference for the window to the parallel market. Committee observed that the investor and exporters window has increased liquidity and boosted confidence in the market with over $7 billion inflow in the last 5 months. The committee will continue to introduce policies that will improve the confidence of foreign investors in the country's macroeconomic management regime. Overall outlook and risks. Available data and forecast of key macroeconomic variables indicate a relatively positive outlook predicated on existing policy initiatives, including the Economic Recovery and Growth Plan. Other potential drivers of economic recovery are the expected increase in government revenue arising from favorable crude oil prices, stable output, and general improvements in the non-oil sector, especially agriculture, industry, and construction. The intervention by the Central Bank of Nigeria in the real sector is expected to continue to yield positive results in terms of output and lower consumer prices. The committee, however, noted some downside risks to the overall short to medium-term positive outlook for the economy. These include flooding, which displaced farming communities and political agitations. On the external front, the hawkish policy stance in the United States, rising geopolitical tensions, and sluggish output recovery in the euro area and Japan could slow down the momentum of global output growth, with significant spillovers to emerging markets and developing countries, including Nigeria. The considerations of the committee. Committee applauded the exit of the Nigerian economy from recession, but observed that the growth remains fragile and therefore hopes that complementary fiscal and monetary policies will sustain the growth momentum. The committee further expressed satisfaction with the gradual but consistent decline in inflation, noting, however, the substantial base effect in addition to the continuous improvement in the Naira exchange rate across all segments of the foreign exchange market and considerable improvement in foreign capital inflow. Committee welcomed the gradual implementation of the 2017 budget, especially the capital component of the budget, and urged increased momentum in expenditure directed at the growth-stimulating sectors of the economy in order to reduce youth unemployment and restiveness. The committee, however, expressed concern on the sustained pressure of food prices, noting risks posed by flood, strikes, and insurgencies in various parts of the country to food production and distribution. Regarding the tepid turnaround in economic activities in the second quarter of 2017, committee emphasized that the employment gains of recovery were still minimal, noting that a number of important job-elastic subsectors were still weak and may require more fiscal support to regain traction. The committee, however, commended the federal government for issuing the executive order aimed at improving the ease of doing business in the country. It also noted the efforts of the government to create jobs in the agricultural sector, with the inauguration of the Presidential Committee on Jobs Creation, targeting at least 10,000 jobs in each state of the Federation over the next 6 months through a boost in agricultural support and funding. The committee enjoins the state governments to work with the Presidential Committee to actualize this plan without further delay. MPC also noted with satisfaction the directive of the federal government to all states to promptly pay outstanding salary arrears in order to boost aggregate demand. It commended efforts to clear outstanding contractor arrears, prompt settlement of trade disputes with certain unions of organized labor, including the Academic Staff Union of Universities and health workers, as well as the release of money to settle outstanding entitlements of the erstwhile workers in defunct Nigerian Airways. These efforts, the committee reasoned, would improve aggregate demand and further strengthen the weak recovery. MPC restated its commitment to maintaining stability in prices, without which meaningful recovery cannot be achieved. In this regard, members welcomed the gradual narrowing of rate spreads in the foreign exchange market and urged the bank to continue to monitor and respond proactively to threats and vulnerabilities in the foreign exchange market. On the outlook for financial stability, the committee noted that in spite of the banking subsector's resilience, the weak macroeconomic environment has continued to impact negatively on the stability of the subsector. The committee reiterated its call on the bank to sustain its surveillance of deposit money banks' activities for the purpose of prompt identification and mitigation of potential vulnerabilities. Committee also called on deposit money banks to support the quest to move the economy forward by extending reasonably low-priced credit to the private sector. In arriving at its decision, committee took note of the gains so far achieved as a result of its earlier decisions, including the stability in the foreign exchange market and the moderate reduction in inflation. The option was whether to hold, to tighten, or to ease. These were subjected to extensive debate. As in previous meetings, although tightening would help rein in inflation expectations and strengthen the stability in the foreign exchange market, the committee felt that it would further widen the income gap, depress aggregate demand, and adversely affect credit delivery to the private sector. The committee also noted that tightening may result in the deposit money banks repricing their assets and loans, and thus raising the cost of borrowing and therefore heightening the already weak investment position and non-performing loan condition of bank customers. With respect to loosening, committee believed that although it would make it more attractive for Nigerians to acquire assets at cheaper prices, thus increasing their net wealth and therefore stimulate spending as confidence rises, it nevertheless felt constrained that loosening at this time will exacerbate inflationary pressures and worsen the exchange rate and inflationary condition. Committee also felt that loosening will further pull the real rate deeper into negative realm as the gap between the nominal interest rate and inflation widens. On the argument to hold, the committee believes that the effects of fiscal policy actions towards stimulating the economy have begun to manifest as evidenced in the exit of the economy from the 15-month recession. Although still fragile, the fragility of the growth makes it imperative to allow more time to make appropriate complementary policy decisions to strengthen the recovery. Secondly, committee was of the view that economic activity would become clearer between now and the first quarter of 2018, when growth is expected to have sufficiently strengthened and gains in receding inflation very obvious.